Ladies and gentlemen, good day and welcome to the Voltas Q4 FY23 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Bhumika Nair from DAM Capital. Thank you, and over to you.
Yeah, thank you. Good afternoon, everyone. I would like to welcome you to the Q4 FY23 Voltas earnings call. We have the management today being represented by Mr. Jitendra Verma, Chief Financial Officer, Mr. Manish Desai, Head Corporate Finance, Mr. Vaibhav Vora, Manager Corporate Finance. I'll now hand over the floor to Mr. Jitendra Verma for his initial remarks, post which we'll open up the floor for Q&A. Over to you, sir.
Hi, thank you, Bhumika, and a good day to everyone else. As we entered the financial year 23 in the beginning of 23, it was said to be a year of recovery, leaving behind the after effects of COVID, Russia-Ukraine war. While on one hand supply chain disruptions were unwinding, synchronous tightening of monetary policy by most central banks, resulting increase in the interest rate and thereby controlling effects of elevated inflation. The volatility in commodity prices, signs of turbulence in the banking network are holding the economic growth across most of the countries. Despite the challenges across the globe, India continued to show resilience to the effects of various global events. The widening of current account deficit, depreciation of the Indian rupee and muted capital inflow did impact the economic growth in the later part of the year. The impact of the higher inflation rate witnessed in the consumer confidence index across segments and in particular the discretionary sectors. However, the policy measures taken by the central government to strengthen manufacturing in key sectors with production-linked incentives, higher allocation towards building infrastructure, and softening of inflation rates shall support the economic growth in the coming quarters. Given the ever-challenging environment, Voltas' product business has performed relatively better with growth across all product categories amid persistent rains and muted consumer sentiment towards discretionary spend. Our consolidated total income for quarter 4 financial year 23 was rupees 3,003 crores as against rupees 2,700 crores in quarter 4 FY22, which is a growth of 11% year on year. Profit before tax and after tax was rupees 214 crores and rupees 143 crores respectively. Earnings per share for the quarter ended 31st March was at rupees 4.35 against rupees 5.52 reported last year. The consolidated total income for the year ended 31st March 2023 was higher by 19% at rupees 9,667 crores as compared to rupees 8,124 crores in the corresponding period last year. Profit before share of profit, loss of joint ventures, associates, and tax was at rupees 672 crores as compared to rupees 808 crores in the corresponding period last year. Profit before tax, after share of profit, loss of joint venture associates, and an exceptional item was at rupees 307 crores as compared to rupees 697 crores last year. The exceptional item of rupees 244 crores pertained to provisions made due to termination of contract and encashment of bank guarantees for 2 overseas projects in Dubai and Qatar respectively. Legal proceedings have been initiated against the main contractors for recovery of these proceeds of bank guarantees and other amounts due from them. Net profit after tax was at rupees 136 crores as against rupees 506 crores in the corresponding period last year. Earning per share as at 31st March, earning per share for 31st March 2023 was at rupees 4.08 as compared to rupees 15.23 last year. The corporate balance sheet continues to remain healthy with the cash and cash equivalent at rupees 2,590 crores at the year end. A snapshot of our results for this quarter and for the financial year was already given in our detailed statement yesterday. In segment A, unitary cooling products, UCP, the onset of summer season with higher temperatures in the early part of March resulted in increased demand from the consumer. The unseasonal rain in the latter part of the month deferred the demand for the cooling product. However, the weather forecast for hot summer and scorching heat witnessed in the current month has increased footfall for the product category across major parts of the country. The consumer's desire to have products with advanced features and its long-term advantage of saving in energy cost, the split inverter category of air conditioner is in high demand. The expanded product portfolio of Voltas with in-house designed SKUs and competitive pricing has resulted in increased share of the inverter category to 75% from 63% during the year, and its contribution is in excess of 80% for the quarter. Based on the success of the inverter split category, the company has expanded inverter portfolio in the window category as well at strategic price points during the current season. Aggressive pricing to leverage early summer sales and garner the market share has increased in an already fragmented market. While we continue to be leader in the MBO, that is multi-brand outlet, for the overall air conditioner category with year-to-date February market share of 21.9%, the month market share for February month was at 18.2%. Nevertheless, secondary-driven incentive program across sales channels, healthy tie-up with modern trade and organized channels, extensive network of exclusive brand outlets, EBOs, including experience zones at strategic locations, along with customer-centric exciting schemes during the season shall help strengthen the market share. Commercial refrigeration category continued its growth journey during Q4 of the year and for the year, even on a higher base with increased participation from retail chains and OEMs. Within the commercial refrigeration category, higher demand was witnessed in water coolers, water dispensers, and Visi coolers. The category is expecting to grow further considering a rapid urbanization, change in dietary preferences, demand for the frozen foods, and market expansion by the OEM of ice creams, chocolates, and beverages. The company has expanded its product SKUs to cater to the demand for each segment. During the quarter, the company has made inroads for medical refrigeration products in a small way and will enhance its focus to take advantage of the increasing need of these medical refrigeration products. Having planned capacity expansion, Voltas is geared to launch a number of consumer-focused products with enhanced features and quality in the near future. Prediction of early summer with above normal temperatures, seasonal tie-ups with modern and retail chain helped placement of air coolers across the value chain. The exclusive product has further supported tie-up with e-commerce and evolving and preferred channel for the short season product category. Along with active channel participation, the company has introduced many SKUs to balance the product portfolio for each of the product subcategories. The efforts have yielded desired results in further strengthening brand position and securing market share of close to 9% in air cooler segment. Expansion of commercial establishments across various sectors and a growing demand for light commercial and ductable products resulted in growth for the commercial air conditioning category with improved margin. The focus on customer retention with value-added services is supportive in securing long-term orders of after-sales service at a competitive pricing. On the cost front, softening of the commodity prices, although they still remain volatile, prudent and well-thought-out sourcing has helped contain material costs to a great extent. However, the continuous advantage of the same may not be certain given the erratic and fluid demand and supply gap for the critical inputs. Nonetheless, our efforts will always be there to remain competitive and continue to provide value for money products to the consumer, considering twin objective of market share and margin. To summarize, for the quarter ended March 2023, unitary cooling product segment registered revenue of rupees 2,049 crores, a 13% growth in turnover from rupees 1,800. The segment reported an EBIT of rupees 206 crores in quarter 4 as compared to rupees 192 crores in quarter 4 FY2022. For the year ended March 2023, the segment registered 33% growth in turnover to rupees 6,475 crores from rupees 4,882 crores with the EBIT of rupees 538 crores. Segment B, electromechanical projects and services. Segment revenue for the quarter was rupees 746 crores as compared to the previous corresponding quarter of rupees 692 crores. Segment result for the quarter reported a loss of rupees 14 crores as compared to profit of rupees 48 crores for the corresponding quarter last year. Segment revenue for the year was rupees 2,403 crores. The segment result for the year was rupees 302 crores after the exceptional loss of rupees 244 crores. Domestic project business witnessed a healthy order booking of rupees 1,910 crores as compared to rupees 848 crores in similar period previous year, comprising of single largest order of rupees 1,200 crores in electrical. The planned and timely execution of the project resulted in achieving threshold for recognizing margin as per internal policy and thereby contributing to the results. Further, a tight monitoring on working capital and focus on collection improved return on the capital for the domestic project business. Lower order path in the international project business as most of these projects are at the completion stage impacted the top line as compared to the previous year. The region continued to witness a delay in certification and thereby collection of the outstanding amounts, resulting in provisions following prudent and conservative policy. Having said, all efforts are being pursued to engage with customers to expedite certification work and improve collection of the due amount. The carry forward order book for domestic projects stands at rupees 5,799 crores, containing orders across water, HVAC, rural electrification, and urban infra activities. The international order book as at 31st March 2023 stood at rupees 2,356 crores, largely in UAE and Saudi Arabia region. Total carry forward order book of the segment stood at rupees 8,154 crores, vis-a-vis rupees 5,360 crores of outstanding orders as at 31st March 2022. Segment C, engineering products and services. Segment revenue and results continued to report improved performance for the quarter, registering healthy growth over previous year. Segment revenue for the quarter was rupees 142 crores and EBIT for the quarter was rupees 56 crores respectively. Segment revenue for the year was rupees 522 crores and the segment result for the year was rupees 200 crores. Better average billing hour rate and customer-focused approach has supported the growth in Mozambique territory. The removal of export levy on iron ore and increased focus on infrastructure sustained the demand for crushing and screening equipment. Textile sector continued to witness challenging environment on account of lower than usual utilization of spinning mills due to lower export orders and high prices of key raw materials, cotton and yarn. Despite this adversity, the vertical has performed outstandingly on the back of strong order book and introduction of various innovative products along with OEM. The focus on after-sales service has also supported the overall revenue growth. Voltas Beko. Revival of demand, particularly in the month of March, has resulted in the overall volume growth of 26% during the quarter. The brand has cumulatively sold in excess of 3.33 million units since its launch and has become first brand to achieve this milestone in the shortest period of time. The expansion of distribution reach, focus on more energy efficient star-rated products with wider range of product SKUs and in-housing manufacturing of the high-value added products supporting the overall growth. Leveraging the strength of the joint venture partners, both in manufacturing and distribution, is helping the Voltas Beko brand to timely introduce innovative products with differentiated features and expanding distribution reach in the targeted and strategically important markets. This concentrated effort has resulted in securing a market share of 5.3%, increase from 4.4% in the month of March, with the market share of 8.9% in the sub-segment of washing machine category of semi-automatic washing machine. Our objective is to have more value-added products to be manufactured from own factory and thereby control and strengthen the supply chain to improve overall margin. With this objective, trial is underway for the fully automatic front-loaded washing machine to be manufactured in-house after a successful launch of frost-free refrigerator during the current season. The lower penetration in most of the product category, consumer shift to the premiumization and technologically advanced product along with lifestyle changes bodes well for the product category and the brand to progress on the defined objective of market share in a profitable way. Outlook. Cooling products being a weather-dependent and seasonal product, the summer period becomes critical for the industry and company for the growth. The current weather forecast and increased footfall projects towards a reasonable growth. The company is adequately prepared to secure the opportunity both on supply and consumer demand front and will continue to pursue its aggressive strategy to strengthen market share in a profitable way. As you are aware that the company had planned for compressor manufacturing through joint venture with Highly International, subject to the necessary regulatory approval. As these regulatory approvals were not forthcoming, both the parties have mutually agreed to terminate the joint venture agreement. In case of projects business, we will continue to follow cautious and risk-mitigated approach while selecting new orders. The execution of the orders in hand is paramount to ensure timely completion of the project within tendered margin. With an eye on sustained profitable growth while enhancing focus on product business and project business independent of each other, the board has approved an internal restructuring of the international operations, including investments in overseas joint ventures and subsidiaries to be housed in a 100% wholly owned subsidiary. Thank you. Hello?
Yes, sir.
Q&A, please.
Okay. Thank you very much. We will now begin the question and answer session. Anyone who wishes to take a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. We will wait for a moment while the question queue assembles. The first question is from the line of Mr. Ankur from HDFC Life. Please go ahead.
Yeah. Hi, sir. Good afternoon. Thanks for your time. One question on the room AC side. Clearly March, because of unseasonal rainfall, we understand, obviously didn't go well. And then there seems to be that the inventory in the channel, at least when I spoke to some of the channel partners and, OEMs as well, was fairly high. So how are you seeing channel inventory right now? Obviously, April, we did see some heat waves, etc. So I'm assuming some volumes would have got cleared. But how are you seeing inventory in the channel? And more importantly, earlier we were talking of a price hike to come through maybe in April, the early part of Q1. So how are you kind of seeing that?
Thank you, Ankur, for the particular question. See, this high channel inventory is basically a period, when you are looking at March, towards the latter part of the month of March, there were incessant rains practically all over India. So therefore, if we just look at the point in time on end of March, there is a possibility that in certain channel partners, the inventories were stuck. However, as we sit at this time, we have seen that the weather has been really hot, and all the channel inventories which were there have all got cleared up, and we are all the industry is looking at a very good season going forward in the months to come, or at least in during the summer months. As far as your second question, can you ask that again? You said something about pricing in April or something.
That's right. Because So I'll just repeat myself. So I remember, in the last Concall, you had said that we'll take, or at least we'll look at price hikes in the beginning of Q1, around April, May was what you were, what you said last time around. So I'm just wondering, is that broadly on track? Have we taken any price hikes in April, or are we looking at taking any price hikes in the next month?
I understand. The fact is, no, we have not taken any price increases in the month of April. And as the future goes, we always keep looking at the price movement very cautiously. And, certain other brands had actually gone for deep discounts, which we continue to believe are not sustainable. And therefore, we maintain our position and have not taken any discounts. But at the same time, we have not increased the prices also. And that's a thought and policy we continue to look at.
Okay. And just one last question would be on the margins in the UCP segment, and I remember you called out, high single-digit margins to kind of continue. And again, I'm talking on an annualized basis. So last year was closer to 8.3, thereabouts. So is that something you believe should continue at least over the next 12-15 months? Is that how we should look at margins?
In a one statement, I would say, or in a one word, I would say yes. That's the outlook we still maintain. However, the high single digit margin. There may be, some periods when it may go down closer to, like instead of a very, very high single digit, it may stay around the same number, but slight volatility may happen.
Thank you. Mr. Ankur, may we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Ladies and gentlemen, please restrict to 1 to 2 questions per participant. Thank you. Our next question is from the line of Mr. Amber Singhania from Nippon India AMC. Please go ahead.
Hi, sir. Thanks for taking my question. Just one question from my side. Basically, when we see Voltas, we have always seen in the last decade, Voltas has always been very dynamic towards the market changes and always taken steps proactively towards turning the things towards their favor in terms of market share growth. However, in last 5 quarters, we are seeing that we are continuously losing market share every quarter. So it has been almost 2 seasons now wherein we have seen a market share decline. So just wanted to understand, sir, where exactly are we losing out? What is the introspection that the company has done? What could be the reason where we are seeing this continuing, not just 1, 2 quarters, but continuing 2 seasons as it? And what are the steps you are taking to correct it, correct this fall as such?
So, Amber, if I want to take your questions, I'd like to split into 2. The one is how are we seeing the market, and once we do analyze on that, how we are trying to react to the same. Your reading is right that in the last 2 quarters our market share is falling out. However, as we said earlier as well, we have to wait for how the season to roll out. But from the season perspective, you will see a good amount of traction coming during the March to June period. What we also reported, and I don't know, in the last investor call, somebody asked me why you're reporting YTD, and I confirmed that once we come to the season, we'll report both YTD and the monthly market share. And that's what we have reported even during the current year when we are doing this call. So I would say that we cannot react or we cannot completely follow the competition, because we are reasonably sure that the price level at which the competition is operating is not sustainable one. Sooner or later it will bounce back, and once you do on a pricing side, you are compromising many things also in this business, and we would not like to have those kind of features going or the mind not going to the consumer's mind. So we are reasonably confident that the market will see a stabilized kind of operating in the near future, and then we'll try to reap the benefit of what we lost the last 1 quarter. Let me assure you that we are watching this market continuously, and whenever we require and we find reasonable to take steps into it, we are doing it, but keeping in mind that margin is also equally important.
So is it purely the price competition which is leading to this kind of fall, or is there anything else also which is impacting our positioning in the market? Is it maybe the geography or maybe the product or maybe something else, or is it purely the price factor?
See, if I were to put in the order of reasoning, I would say that the price becomes the more important. And we all know that if the price which to eye on a premium start looking into or start trading at closer to the mass market price, you may see some kind of traction the way in which we are seeing today in the market what is happening. So I would say the price is more important. Second thing is once you have the visibility or a product strength, you would like to expand to the market where you are weaker positioning. So we have seen Blue Star and a few of the brands are becoming very strong in the north market and trying to put the pricing strategy on a forecard in order to secure the market share. So these are being known factors, and whenever the brand would like to play or try to work on a market share, this is the normal strategy the brand has to follow, given that product will not give such kind of huge differentiation to demonstrate. So this is the known practice, Amber, and we hopeful that it will get streamlined over a period of time, and all players become, I would say, reasonably mature in terms of operating and driving the markets.
Thank you. Mr. Ambar, may we request that you return to the question queue for follow-up questions. Thank you. Our next question is from the line of Dhananjay Bagrodia from ASK. Please go ahead.
Hi, can you hear me?
Yeah, very much.
Sir, please go ahead.
So what would be your CapEx guidance for next year for 23-24 for 24-25 broadly?
Up to 24-25? Because we are in 23-24 currently.
Yeah, so 23-24 and for the year after that?
Yeah, so probably in the range of 350 to 500 crores, which will largely now concentrating more on the capacity expansion and the backward integration which we have put for the PLI scheme. Since the compressor plant is now off the card currently, whereas the alternative is still under evolution, but it may take slightly a longer time.
Okay, and so for the year after that would be how much? So 1 year is 350, 500. Next
So I have given you 18 months kind of capex plan from now.
Okay.
350 to 450 crores it will lay down.
Okay, and roughly what capacity would we get after this capacity expansion?
So the AC capacity will be almost doubled to 2 million, whereas the commercial refrigerator also will get doubled from 2.5 million what we have to 5.5 million.
Okay, so and commercial ref will become 500,000, right? And sir, just one more question. Let's say what do you think would be, now that we're doing standalone will be the UCB business, what do you think is a sustainable ROC for the UCB business? And in terms of the levers, do we see the lever coming for margin improvement, asset turnover, or net working capital improvement for the UCB business?
So if you look from the ROC perspective, since not only Voltas but many brands are now taking advantage of the PLI scheme by putting required and necessary capex, the ROC in a near future will definitely see some kind of impact, which may get lower for all players because you will be upfronting the capex, the benefit which will flow over the next 5 to 6 years time frame. Whereas the PLI scheme which government has announced will support to be a competitive in the market, being and localized to few components which currently we are not having it. But if you ask me, overall it will be a combination of both to work together in order to improve the ROC. To give you an estimation, it is very difficult to predict because every player has gone into a different looking into their own strengths in terms of the backward integration. But till such time you are generating returns above your weighted average cost of capital, including the cost of equity, probably it makes it's still a viable option.
Thank you. Our next question is from the line of Mr. Ravi Swaminathan from Spark Capital. Please go ahead.
Sir, just wanted to check with you what has been the kind of growth that we have seen in Voltas before.
So we have, sorry, we could not give email on the investors fill in advance. It is around 26% for the quarter ended March. And if I look for the overall, it will be in the range of 15 to 18%.
15 to 18%. That is what? Full year, right? Full year.
Full year. March has seen the highest growth if I take the quarter breakup for the Voltas products.
Okay. And has there been any price increases across reps, washing machine, etc. In the recent past?
As we said, Ravi, we have to be unlike in air conditioner where some of the proactive role being played by the brand. For Voltas will largely be a follower for the other brands. And since we have the LG and Samsung occupying almost in excess of 50-55%, the all actions in terms of pricing will closely be done following them. So to give you answer in one line, no price action has been taken in the market for Voltas product in this category. Rather, we are now looking for more star-rated products to be produced and to provide at a very competitive price in order to create another differentiation with the competition in all the categories.
Got it. And with respect to this compressor manufacturing facility, would we be looking for some other partner going forward? Or is there any plans to go on your own? Any sense on that?
Definitely we'll be looking at alternatives, and at the right time we would make the necessary announcement in that respect because having sufficiency in compressor manufacturing would be the desired, is the desired objective.
Thank you. Our next question is from the line of Siddhartha Bera with Nomura. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, I'll go back to the question on market share again. I mean, we had indicated that we want to go back to the earlier market share levels, but on a monthly basis, the market share has kept on dropping. So what would you expect probably for next year? So these are the levels which we should expect, or do you believe you still hold on to the earlier levels of 23-24%? You will try to go back to next year?
Siddharth, market share is one aspect. The leadership position is the another aspect, and we have continued to maintain our leadership position in both in the market share as well as in the margins, as has been seen. And if somebody is out there in the market looking at the market share only by raking up losses, then that is what we are saying is not a sustainable position, and we continue to keep looking at our margin share, and the balance between market share as well as margin has to be, it will be the core theme of our, all the policies going forward. And in that respect, we definitely have, from the previous quarter of March, we had bounced back, and in the low summer season, there is some tendency to, lose that market share. And as Manish had earlier mentioned, that when we look at the months coming in the summer season, that will be the time when the the regaining of the market share definitely will happen.
Got it, sir. And second question on the margin side, I mean, we have seen improvement in the current quarter. Can you indicate if there has been support from the higher commercial refrigeration segment in this quarter as well, which has led to a better margin, or that may not be the case? And have we changed any supplier base so that our cost of procurement has gone down, or this is entirely organically we have been able to sort of improve the margin?
See, when you look at our segment results, they comprise of all the product categories, and different product categories have different margin rates. So therefore, to answer that specific question on whether commercial refrigeration has helped or room air conditioners has helped would be a slightly bit not correct at this point. Margin improvement has been seen across all product categories in this particular case, and we are prepared to continue with this trend. The other aspect of your question, whether we will continue to see this in the future, that is definitely the endeavor to keep up these margin rates in all the product categories.
Thank you, sir. Our next question is from the line of Srinidhi from HSBC. Please go ahead.
Yeah, hi. Thank you for the opportunity. Sir, in project business, we have seen a significant scale up in order backlog. Wondering, would it be possible to share some color on how our embedded margin in this backlog and how our working capital terms?
Srinidhi, on the project business, yes, there has been a scale up specifically in the domestic project line, and that's also, I would say, a positive towards the fact that when we had a couple of years ago announced that there would be a transfer of this business to the wholly owned subsidiary, so that the focus can be more on the project, or rather I would say equal on the project business and product business by housing it in a separate wholly owned subsidiary. So that is kind of confirmed with these orders. So once we have gone separate in the business separate in the sense that we are in still the same management at the Voltas level, but there is a specialized focus on the project business. The profitability remains at the similar levels of previously stated, roughly about 4 to 5%, as we have been stating. So that would remain, though the execution would take 2 to 3 years, so it will be spread over the years. So that will continue. And with the same reasoning, the international business is also being organized as we have announced yesterday. So it will take its own time to consummate transfer agreements and doing all the activities which are required.
Yeah. Thank you, sir. And second question I have is, sir, in terms of rationale that you give for business restructuring, you mentioned that this gives flexibility for Voltas to expand its B2C business. May I ask you to elaborate this point, as in, are we talking about going into adjacent product categories, or we are talking more of existing categories that we operate in?
Sorry, Siddharth, we missed your question. You are to project or product business?
No, in the rationale, sir, we also said that this business restructuring will help to focus on B2C space as well, like Voltas.
Right. So as we discussed earlier as well, while doing the domestic transfer, the larger focus will be on a B2C, which is currently what we are doing in terms of the product categories. Yes, there are various other products also which are under evaluation, where we are looking into a potential growth, and accordingly the call will be taken appropriately. And when we say about it, when we done this kind of restructuring, the core objective is the management bandwidth was largely being occupied for the consumer durable businesses and project businesses. The focus was not so accurate, or I would not say the time not being so devoted towards the project business, and therefore this business being transferred with the company, which will have a different set of directors, although the MD and chairman may remain the same for both the internal structuring what we carried out. But there are various product categories under B2C which are under evaluation. It will be premature to quote anything currently. We will definitely disclose when the time is more appropriate.
Thank you, sir. Our next question is from the line of Girish Achhipalia from Morgan Stanley. Please go ahead.
Hi, sir. Good afternoon. Thanks for the opportunity. I just had a factual question. So commercial AC and refrigeration is how much in full year FY23? And also if you can just spell out the top line for Voltas.
I would say in terms of contribution, I have to split into two. One is if I take the CAC contribution to the entire segment A, in the range of it will be 17 to 18%. And if I look from the commercial refrigeration, the second question asked, the commercial refrigeration contribution to the segment, excluding commercial air conditioner, will be around 17 to 80% again.
Okay. And air coolers would be 4 to 5% again, or would it be different?
It would be much lesser than 5%.
And
it is a volume, but small value kind of category.
Okay. And Voltas top line and AC volumes, if you can help for the full year?
Volume, I would not be specifically, but I can give you a range. It is in excess of 1.4 million, the AC put together. And in terms of the Voltas, the top line will be in excess of 1,000 crore.
Thank you.
Thank you. Our next question is from the line of Arafat from InCred Capital. Please go ahead.
Just one clarification. For the AC volume, I spoke 1.4, which is roughly around 1.2 million, close to.
Mr. Arafat, you can go ahead with your question.
Yeah, thanks for taking my question, sir. So my first question is again on that JV which you recently terminated. So I just want to understand what is the main reason. It's only regulatory approval, that thing, or there is some any other reason that you have cancelled this agreement?
Only, I think your question is relevant to the Highly JV.
Yes, sir.
And as stated in our announcement, it is because the regulatory approvals had not been received up to now, and therefore I would say that was the main reason. And you can understand when the government doesn't give these kind of approvals, there may have been certain consideration in their own mind because of the geopolitical situations as we are seeing. And therefore, looking at all those things and after making all the efforts, we have decided to part ways mutually. And that's, I would say, is still the main reason. Yeah. No other.
Okay. Then my next question is on margin of EMP segment. Although you have seen significant jump in order inflow and order book, but sorry to reiterate on that, but what kind of margin are you looking for 24 and 25 for the EMP business?
See, what we have, Girish, is it's a mix of, again, when we say about it's the old and the new project, we are very cautious, selective in the new project, and that too with the building of the higher contingency, given the past experience. So if and you know very well the project cycle does continue for, or any other project does continue for more than 2 to 3 years. So if I have to blend both the old project margin, the new project margin, it should reflect around in excess of 5% for the project business, at least for the year starting the next year. We have seen, in fact, the current margin also is in a good kind of trajectory, but somewhere because of this liquidity stress and delayed collection and having too much conservative on our policy front, given the past experience, you are seeing this kind of level of margin. But otherwise, new projects are churning out the margin closer to the tender, and then tender margins anyway because of the cautious approach. It's the enough amount of contingency, and that with the higher margin percentage.
Thank you.
I just want to hold a minute because there was some confusion in terms of one question being asked about the AC volume and the Voltas turnover. So I just want to make it very clear, the total AC volume for the year 22-23 is in excess of 1.4 million units, and for the Voltas, the turnover is in excess of 1,000 crores. You can go on a question, Chief.
Thank you, sir. Our next question is from the line of Venkatesh Balasubramaniam from Axis Capital. Please go ahead.
Yeah, thank you for this opportunity. Obviously, you have mentioned about competition. So, and you mentioned the name Blue Star. We are already aware of Havells gaining market share. Who are the others who are gaining market share other than these two? Are there other people? Is it Daikin? Is it LG? Or is it someone else? Because we hear all sorts of things. We also hear that Reliance has launched BPL and Kelvinator, and it is started picking up some amount of market share in northern part of India. So is there any truth to that? And lastly, we also hear that when we go to the Tata-owned Chroma shops, the people there, the sales people say that Chroma as the in-house brand seems to be cannibalizing the lower end Voltas AC. So any thought on that? Both being Tata companies, couldn't we work out a relationship that a brand itself can be driven to Voltas? Why should a business group have two different brands at the same time? Please, some thoughts on it.
So let me answer the second question first. See, Chroma is having their own independent entity and independent target towards what kind of product they want to manage it or they want to deal with and what kind of market share they are looking for. The private label brand is not a new concept in India. It is being prevailing for a long time. Yes, it's another competition to the Voltas, and normally when the 40 brands are eyeing for a market share, one more brand by the private label within the group company probably will not impact much because now we used to have a competitive scenario to fight with each one of them. Now the question comes is why not united? The question really comes because every brand carries some kind of perception in the minds of consumer. People have seen how the private label supporting to the after sales service support because these units are having almost more than 8 to 10 years life. although people may give replacement warranties and a service promise and all, we have seen in the market how the outcome of all such kind of promises with the no committed level of franchises working with them or for any brand. I'm not talking about Chroma especially, but I'm talking about all the private level brands who are working on a suboptimal price level. How given that background, let me answer on the market share side what you talked about it. Generally, I have seen even Lloyd is losing its grip on the market. If I take the last 2 to 3 months trend on the market share, however, if I take year on year and get to exit market share, yes, the Lloyd has increased the market share, and the other brands who have increased over there significantly is the Daikin, who is having a market share growth in over and above the Lloyd. So they are leading in terms of growth. I have to put over there. Daikin is growing much faster than even Lloyd. If I come to compare similar period, is the exit market share. Now, question has come on Blue Star. Blue Star also gained market share, but not to the level at which the graph of the GfK reflects over there. They have gained by 0.5 to 0.6%. However, if I look from the Daikin, it is in excess of 200 basis points.
Yeah, okay. Thanks for that. On the electromechanical projects, last year, if I ignore the Qatar and other write-off, which was almost 240 crores, at the EBIT level, what you delivered was something like 58 crores loss. Now, what was the scale of the provisions you have made in the last year?
Sorry, I would not be able to quantify so clearly. But if the press release what I have given to the SEBI is itself talking about before exception and after exception results, and you can easily make it out where the kind of quantum of provisions we made, along with the notes to accounts which we disclosed. It is a good amount of loss, the provision which we carried out. I would say out of that, 2 incidents are an exception, which have not been perceived by us or which have not been even thought about it, that such kind of action can take place, because we have not seen such kind of incidents in the last decade of our existence in the international operation. So that takes away around 245 crores. The balance also I would not like to quantify as it is, but you can see from my segment result itself, which is self-explanatory.
Thank you, sir. Our next question is from the line of Bala Subramanian from Aryan Capital. Please go ahead.
Hello.
Yeah, please.
Hello. Good evening, sir. Sir, on the electromechanical project side, we made a provision of around 240 crores. So we may see any further provisioning in the next coming years. We may see around 200 to 300 crores of provisioning on this project.
Your voice was distorted. Could you repeat your question, please?
Okay, sir. I just want to understand on the EMP side, are we going to see any further provisions going forward on the basis of your current assessment?
I think you are confusing the extraordinary losses with the normal ECL provisions which are there in the business. To clarify, in quarter 2 and quarter 3, there was an encashment which was done by, I would say, not so clean ways, and we have gone legal against them, and that's why it is a completely an extraordinary event which happened, and I can be very assured that these extraordinary events do not happen again, and therefore I do not predict that. However, there is in the segment B, if you see, there is a loss, and that is on account of normal provision. As we have mentioned that there are certain instances of delayed certification and delayed collection. So that has been the main reason, and as being a very prudent company, we take those provisions. Going forward, our efforts on collections and on certifications would be more, I would say, strengthened, and therefore on the basis of that, we would not be projecting or predicting any more provisions. However, when we are dealing with the third party, there is always a case for the other side to do whatever they want to do. So in that situation, one can't rule out the possibility, though from our side, the procedures will always be strengthened, and therefore my prediction is it should not be. But
any reversal of any of the provisions which we made in last year or something like this? Anything positive you can see? Can we see something?
Definitely, as a normal procedure, whenever we collect the amounts which have been previously provided for, as a prudent policy, again, you do take those reversals. And like for the extraordinary provisions we made, we have very clearly stated that we have gone legal against them. And as and when the legal cases are decided, and I believe in that market, that may happen within a 12 to 24 months period. And as and when those legal cases are decided in our favor and we are able to collect the money, we should definitely be reversing those provisions.
Thank you, sir. Yeah. Our next question is from the line of Abhijit Akla from Kotak Securities. Please go ahead.
Yeah, good afternoon. Thanks for taking my question. One clarification with regard to this backward integration to compressors. So, how significant is there a cost advantage in being backward integrated? Now that we are sort of calling off the highly JV, does that lead to a cost disadvantage for Voltas compared to some of the other brands that are setting up this manufacturing? And also with quite a lot of these compressor and other component manufacturing capacities coming up in India, would you expect prices of the finished products to sort of come under pressure over the next couple of years or so? Your thoughts on that, please. Thank you so much.
So, if I look from the cost perspective, India is now, probably the many players in the industry are now evaluating the option of compressors. Yes, we heard about 2 or 3 brands actually jumped into it and going to manufacture for the same. Probably we have to wait for time in terms of how they are becoming cost competitive. The reason being is because all these brands are in the business of air conditioner for almost more than 2 decades. But now the things are changing and they try to cope up or try to be a part of the backward integration player. And that was thought process even for Voltas as well when we decided to move and go with through a joint venture partner. Some in substances like we have to wait and watch, gentlemen, in terms of how become cost competitive, because the China, if I look for, which is the biggest manufacturer of the compressor, they are almost having a 90% of the world capacity, which means on the scale front, on the sourcing front, they are the largest advantage, the largest beneficiary of the same. Whereas in case of India, people are manufacturing for their own consumption, which will restrict to even less than 2 million or 2.5 million or so. Even with that, they are talking about the installing of the capacity. So I would say that let's wait and watch for more time in terms of how the things are shaping up. As far as the capacity is concerned, even though the capacities are coming up, but they are coming in the, I would say, size of 1 million and around 1.5 million, which means even I take the Indian air conditioner market itself, forget about refrigerator and others, which is itself heading towards in this current year, if everything goes well, around 10 million. And all this capacity put together will still fall short of what probably industry requires. So we are reading both import and domestic market will be there for the sourcing of the compressor. Yes, if you have succeeded in the JV, some advantage would have flown in terms of control of the product and the design, I would say, securing the sourcing of the components. However, even though it's not there, we can have a long-term kind of arrangements with any of the manufacturer. As we all know, GMCC also now started manufacturing. Their commercial production is expected now. In fact, our news is they already started in the Q4. So all these options are available for the brand in order to secure the long-term sourcing arrangements for this component.
Okay, great. Thank you so much. And just one last thing on the capex for FY23, which is about 180, 190 crores. Is it primarily in the UCP business itself? And then for the outlook that you gave of about 350 to 450 crores for the next 18 months, would it be roughly possible to give us a split across the major projects into which that amount is being invested? Thanks a lot.
It will be there only on two projects, which is commercial refrigerator and the air conditioner. Both will be on the production capacity expansion, and along with this PLI application which we made, which includes a backward integration, or I would say component manufacturing as well, at the greenfield project at Chennai.
Thank you. That brings us to the end of our question and answer session. I would like to hand the conference over to Ms. Bhumika Nair from DAM Capital for closing comments.
Yeah, I would just like to thank the management for giving us an opportunity to host the call, and wishing you all the very best, as also the thanks to all the participants for being on the call. Sir, any closing remarks from your side?
No, in fact, we're grateful to have these questions coming from the participants. I am sure 1 hour will be definitely short for the participants which are in tune of which are a number in excess of 100, 200s. So we are open for any kind of question answers which we could not cover up in this during this investor call. And I wish all of you a good day and hope that each one of you will have a Voltas product or a Voltas product in your home during this season period of time. Have a great day to all of you.
Thank you. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.